Tanya, I have one more little one. I'm so sorry.
What's that?
Do you see 1031s come up in the with a sale of a business has assets attached to it, like a 1031 on the real estate property?
So a 1031 is not an option for a business. 1031 can only be done with real estate. There it was in the past. Uh, I think that changed in 2019. I'm not sure when exactly. It was when the last tax thing passed. But yeah, there is no 1031 exchange for businesses, but there are other ways to try to mitigate taxes in a business transaction. Some of them are like, for example, a structured sale. So a structured sale comes from the legal arena, where structured settlements came into play, where you have, for example, Larry Parker got me $20 million for my accident. And instead of giving them $20 million for their judgment in personal injury, they will be paid out over time. And it's called a structured settlement. So structured sales was done years ago by Allstate. Then Allstate got out of the business for a while and there were no structured sales being done. But currently MetLife will do them. So what happens in the structured sale is all the money, all the buyer's funds go into escrow, but instead of going to the seller, it works more like an installment sale where the funds from escrow go to MetLife and MetLife holds them in some type of an annuity, and they've already established how the payout is going to look like. And so, for example, the seller may say, I don't want any money for the first 5 years and then I want the rest of it paid out over 20. Or I don't want any money for the first 2 years and then I want it paid out over 10 years after that, or however they want to do it. It's very flexible. But ultimately, they only have to declare the income in the year that they actually receive it. So rather than, the thing you have to be careful about is that when a business is sold, sometimes a seller has to pay to recapture depreciation that's been recaptured. They might obviously have to pay cost of sales. So in setting up the structured sale, you need to make sure that the seller is going to receive sufficient amount to cover the expenses that they're going to need to pay in taxes and anything else. Now, cost of sales will be paid through escrow. That's not usually an issue. But yeah, the seller proceeds, you want to make sure there's enough that goes to the seller that they can pay any tax liabilities that they may have on recapture of depreciation, because that can't be deferred, but the capital gains can definitely be deferred and kicked down the road. So, Gina, you know about more about structured sales?
The DST type stuff?
Not
DST.
Not DST, no.
Sorry, I was listening to something else in the back.
Okay, no worries.
So no. I just know that whenever you're selling a business that you want to, oh my goodness, when you're dealing with the seller, you're looking to help them save the most on taxes as well as gain the most in value in your business, which is what Tanya's talking about. And so, yeah, I actually learned a lot here from that on the structured sales.
Yeah. So one thing I can tell you is that the tax mitigation strategies, there are far more available. The longer the seller has to really start thinking about that and putting things in place. If they start preparing for their business sale 5 years in advance, then they have a lot of options, a lot of flexibility. If they call you, the day they decide they want to sell and say, hey, I'm burned out and I want to sell, then they're very limited in the tax mitigation strategies that can be employed at that place. IBBA and M&A Source, we've got a guy named Monty Walker that does a lot of workshops and a lot of training, and instructs a lot of courses on working capital and everything else. Monty is phenomenal at structuring transactions. So if you can ever, when you have time, you have a seller who has, a kind of a lower middle market type business that wants to structure that transaction, a way to mitigate his taxes, if you can get Monty involved in that early on.
Not the Bassey
there's a lot
group?
more that can be done.
Roman
me?
Bassey? What about Roman? With Bassey and
Um,
Bassey? Or do you
yeah.
Monty's better?
Yeah, they do that. I just know Monty a lot better.
Oh, okay. I have
But
not met him.
yeah. Yeah, so there are some good people out there in terms of structuring. And then again, you know, your smaller transactions are going to be harder. There's not as much that can be done with those because a lot of times those sellers don't want to pay any professionals. And so, you know, these guys are not going to do tax structuring, tax mitigation work. They're not going to do that for free. It's just, you know, you want the benefit, you gotta pay for the services.